Welcome, curious minds, to another deep dive. We're plunging into a topic today that might just completely flip what you assume about payments. We all hear it constantly, right? The world's going cashless,
Yeah.
fast. Digital wallets, contactless cards, online stuff, supposedly taking over everything. But what if that's, well, not the whole picture? What if I told you that actual physical cash isn't just sticking around, but globally, it's actually growing?
Uh-huh.
Seriously. So our mission today is to really dig into the global cash payment market. We'll be unpacking some fascinating insights from a pretty comprehensive recent report, looking at regional trends, forecasts, the works. Get ready to maybe challenge some beliefs, because this is where it gets really interesting.
It really is. It's a compelling counter-narrative to what, frankly, most people probably expect. I know I was surprised. And yeah, our insights today, they're all coming straight from the Global Cash Payment Market Forecasts 2021-2033 report. That's by Cognitive Market Research. What's immediately striking is, despite all the talk about a cashless future, this data shows a market that's not just solid, but actually expanding. So we're going to unpack the numbers, the forces behind them, region by region, and figure out why this surprising growth is happening.
Okay, let's do that. Let's unpack it. Starting maybe close to home for a lot of us. North America. You'd think, right? A region so digitally savvy would be leading the charge away from cash.
You would think.
But the report paints a very different picture.
Yeah.
North America's cash market. Get this. Around $71 billion in revenue in 2021.
Yeah.
Projected to nearly double. Over $120 billion by 2033.
It's substantial.
That's a steady growth rate, almost 5% annually, year after year growth. So what do you think is really driving this persistence of cash in places like the U.S. and Canada? Is it a specific group or something else?
That's a great question, because it really does fly in the face of popular perception. I mean, yes, the United States predictably leads the region. You see that robust growth, about $61 billion in 2021, projected up to $105 billion by 2033. But what's fascinating is how consistent it is. Look at Canada. It actually shows an even higher compound annual growth rate, over 5.6%.
Wow, okay.
And Mexico also sees significant expansion. So it's not just, people being slow to change. It suggests cash serves real ongoing needs. Think about the gig economy, right? Where instant payment, cash in hand, is still really important.
Right, that makes sense.
Or maybe privacy-conscious consumers who just prefer transactions that aren't tracked. Even in really developed economies, cash clearly holds onto a vital role for certain kinds of transactions.
Okay, so it's not just a slow fade out. It's maybe people actively choosing cash for specific things. That makes sense. All right, let's shift across the pond then. Europe. Similar story of expansion there, too.
Yeah, pretty similar.
The market was around $49 billion in 2021, expected to climb over $86 billion by 2033. The growth rate is just under 5% annually. But what about places like, say, Germany or Sweden? We often hear they're practically cashless already. Do these numbers hold up there, too?
They absolutely do. And this really raises questions about how payments actually work on the ground versus the headlines. Take Germany. Often seen as super efficient, right? But it's a leader in Europe's cash market. Revenues projected to jump significantly, over 87% between 2021 and 2033.
87%? Wow.
Yeah, and the UK. Similar strong growth, over 5% annually. Even countries like Spain and Sweden, often highlighted for digital payments, their cash markets, still showing healthy compound annual growth rates, over 5%. It just highlights that cash serves different needs, small daily buys, maybe larger transactions where privacy matters, or just immediate settlement, even in very digital societies.
So cash isn't vanishing anytime soon, not even in places we think of as pioneers of digital payments. But the real eye-opener, the big surprise, I think, from this report, comes when we look at the Asia-Pacific region. Identified as not just major, but the largest and fastest-growing cash payment market globally.
That's right.
Valued at over $83 billion in 2021. Projected to hit a staggering $166 billion by 2033.
Doubling.
That's an annual growth rate of almost 6%. That's a huge jump.
It is, and this is a critical point. The sheer scale and the speed of growth in Asia-Pacific, it really underlines how dominant cash still is in many parts of the world. China, for instance, tops the list there. Its cash market is projected to nearly double over this period. But what's particularly insightful, I think, is India.
Okay.
India shows the fastest growth rate of any country mentioned in the report, an astonishing compound annual growth rate over 6.7%.
Over 6.7%.
Annually. Climbing from about $13 billion in 2021 to nearly $29 billion by 2033. And this isn't just population size. It's tied to factors like India's vast rural areas that still heavily rely on cash,
Right.
and maybe even perhaps a bit of a rebound effect after past demonetization efforts, where people sort of rediscovered the need for tangible, accessible money.
Wow, that's incredible for India. It really hammers home how different regions have their own unique payment ecosystems.
I don't know.
It defies that simple digital story. Okay, moving on. South America, the cash market there, also showing steady, significant growth
Correct.
from around $17.5 billion in 2021, projected to reach over $33.5 billion by 2033. The annual growth rate there is over 5.5%.
Yeah, and what stands out there is Brazil. It leads the region by a significant margin. Its cash market is expected to grow from roughly $6.8 billion to almost $13 billion over that same period. And interestingly, other major economies like Argentina, Chile, they're all growing at strong rates, too. It just highlights cash's resilience, even with more digital options coming online. It points to, well, the enduring importance of cash for daily transactions, especially maybe in regions with economic ups and downs, or where lots of people just prefer physical money for budgeting, for control.
Makes sense. And it's a similar picture in the Middle East, right? Cash payment revenue was about $10 billion in 2021, forecasted to nearly double, over $19 billion by 2033, growing at over 5.5% annually as well.
Indeed. And a key takeaway there is countries like the UAE are leading that growth, an impressive annual rate of over 6%.
6%, okay.
Yeah, and Turkey, Saudi Arabia also seeing robust expansion. It really suggests that even with rapid economic growth and modernization in these regions, cash continues to play this vital role, often preferred for, say, large value transactions, or maybe just deeply woven into cultural habits around spending and saving. It's not a relic, it's like a living part of the economy.
Right, not a relic. I like that. Okay, finally, let's touch on the African market. It started smaller, around $8.6 billion in 2021, projected to hit over $16 billion by 2033. Still a healthy annual growth rate, nearly 5%. Why do you think cash is holding so strong there, even as we hear a lot about mobile money solutions gaining ground?
That's an important distinction to make, definitely. Mobile money is growing, no doubt, but cash retains just immense importance in Africa. And it's largely, well, a combination of things. You've got a huge unbanked or underbanked population who rely solely on cash.
Yeah.
You have these vibrant informal economies, think street markets, small vendors, where cash is just how things work.
Cash is king, yeah.
Exactly. And in many areas, there's simply limited access to reliable digital infrastructure, stable internet, consistent electricity. It's not always there. So for many, cash isn't really a choice. It's often the only practical way to buy and sell. You see Nigeria, South Africa showing robust growth rates, well over 5%, and the rest of the continent also sees significant expansion. It just underscores this foundational role cash plays.
Okay, so wrapping this all up, what does it all mean? Our deep dive into this cognitive market research data, it shows a really clear picture, I think, an undeniable one. The global cash payment market, it's not declining, far from it. It's projected to grow significantly.
Significantly.
Starting from, what was it, $240 billion-ish in revenue in 2021?
Yeah, $240.361 billion to be precise.
Right. Anticipated to hit nearly $300 billion, $295.3 billion in 2025, and then reach a remarkable almost $446 billion by 2033.
$445.721 billion.
That reflects a global compound annual growth rate of over 5.2%.
5.281%.
It's a powerful reminder that the story of payments is way more complex than just digital taking over.
Absolutely. When you zoom out, look at the big picture. What this tells us is that cash's staying power, its growth, is rooted in real things. Things like, cultural preference, the very critical role of digital infrastructure being accessible or not being accessible.
Yeah.
And just the prevalence of cash-based retail, especially in emerging markets. These aren't abstract ideas. They directly shape how billions of people handle money every single day. It really forces us, I think, to reconsider how we understand global economic trends. We need to integrate these nuanced realities, not just chase the latest tech headline.
Indeed. And for you, listening, as you go about your day, maybe think about this. In a world that's constantly pushing digital innovation, what does this continued significant growth of physical cash really tell us? What does it say about actual user behavior, about accessibility, about the fundamental role money plays in all sorts of different societies? Will digital solutions ever truly fully replace physical cash? Or will these underlying drivers we've talked about ensure cash remains this powerful, quiet force, not just persisting, but actually expanding in the global economy? Something to mull over until our next deep dive. Welcome to the deep dive. Today, we're getting into something that feels almost paradoxical in our digital age. Cash. Physical money. It seems like it should be fading away, right? But it's surprisingly sticky. We've looked at a whole range of sources, really trying to understand the dynamics here. What drives cash use, what holds it back, and what its future might actually look like.
Yeah.
Because despite all the talk, all the headlines about going cashless, it's clear cash is still a major player globally.
Okay, love to dive right in and unpack this. So maybe start us off. What are the core reasons? Why does cash hang on so tightly when digital is everywhere?
Well, it's fascinating, isn't it? Because for a huge number of people, cash isn't just like a preference, it's a necessity.
Yeah.
Think about it, nearly a quarter of adults worldwide don't even have a bank
A
account.
quarter.
Yeah.
Yeah.
So especially in developing countries or even just rural areas, the digital setup isn't always there. Banking can be hard to access. Cash just works instantly. You don't need internet. You don't need a smartphone. You don't need to know how to use an app.
Right, no barrier to entry. Exactly. And it's absolutely crucial for the informal economy. You know, all the transactions happening outside the official systems, cash is king there. What's fascinating here is how cash isn't just convenient, but truly essential for millions. Billions, really.
That necessity point is powerful.
Yeah.
But it's not just about regions without infrastructure, is it?
Yeah.
There's something more universal.
Oh, definitely. The other huge factor is just universal acceptance. You can go almost anywhere, street markets, taxis, local cafes, maybe even, paying a neighbor back, and
Yeah.
cash works.
Mm.
It's offline, no transaction fees for the person spending it, and literally everyone can use it. Doesn't matter if you have the latest phone or any phone at all.
It truly is king in so many scenarios.
Yeah,
That sheer usability is hard to beat.
absolutely. It just functions everywhere.
And what about the personal side? You hear people talk about privacy, about control. Does that play a big role too?
A very big role. Yeah, that's another key driver, privacy and spending control. Think about it. Cash leaves no digital footprint. None.
Right. Unlike pretty much everything else we do now.
Exactly. So for people worried about surveillance or their data being sold or just targeted ads popping up after they buy something, cash offers complete anonymity. It's almost like a little act of defiance against, all the tracking.
I could see that appeal.
And then there's the control aspect. Having physical money, feeling it leave your hand, it makes spending feel more real. It's often easier to budget, to kind of stay grounded compared to just clicking a button or tapping a card. That friction can actually be helpful.
Less chance of accidental overspending.
Precisely. That tangible nature is a psychological thing, but it's powerful for managing money day to day.
Okay, so we have necessity, universal acceptance, privacy, control. A strong case for cash sticking around. But obviously, it's not all smooth sailing. There are big forces pushing the other way. What are the main challenges, the restraints on cash?
Well, the biggest one, no surprise, is the incredible rise of digital and contactless payments. It's just exploded. You look at things like India's UPI system, mobile wallets everywhere, tap-to-pay cards. It's fast. It's convenient.
And perceived as safer, maybe, especially after COVID.
Definitely. Hygiene became a big talking point. Plus, governments often push these digital methods with incentives. You really see this shift happening fast with younger people. And in cities, cash use is definitely lower in those groups.
Okay, so digital convenience is a major headwind. What else?
There are also the inherent downsides of physical cash itself. Security is a big one. The risk of theft, getting counterfeit money, and the fact that it's untraceable, which can be good for privacy but bad for illicit activities.
Right.
And for businesses, handling cash is, well, it's a hassle. It costs money. You've got storage, transport, security, like armored cars, time spent counting. It all adds up. It's an operational burden, and that pushes businesses towards digital, too.
And you mentioned governments pushing digital. How actively are they trying to move things away from cash?
Oh, very actively in many places. If we connect this to the bigger picture, we see governments actively reshaping financial behavior. Their motivations vary. Sometimes it's about financial inclusion, getting more people into the formal banking system.
Okay. Sometimes it's about fighting corruption or tax evasion because digital leaves a trail, makes things more transparent.
Easier to track the money.
Exactly. So they use different tools, maybe subsidies for using digital payments or awareness campaigns. And sometimes much more direct interventions, like we've seen with demonetization efforts in some countries, specifically designed to reduce cash in circulation.
So it sounds like cash is really getting squeezed from multiple directions: convenience, security concerns, business costs, government policy. But the story doesn't end there, does it? It's not just about cash declining. How is it adapting? What trends are shaping its future role?
You're right. It's definitely not just disappearing. It's more about evolving. One major trend is what you might call hybrid payment systems. Cash and digital aren't necessarily fighting to the death. They're often coexisting.
Side by side.
Yeah. Retailers especially are realizing they need to offer both because some customers prefer digital speed, others want or need to use cash. So businesses are increasingly set up to handle both smoothly. It's about serving everyone. Okay, so coexistence. What else is changing in the cash landscape?
Well, somewhat paradoxically, there's actually a lot of investment going into better cash technology. Think about advanced ATMs, smart safes in stores, cash recycling machines.
Recycling machines, how do those work?
They basically take cash deposits, verify the notes, and then dispense those same notes for withdrawals. It makes the whole process more efficient for banks and retailers. It streamlines everything, reduces the cost of handling cash, and actually helps keep cash available for people who need it. So technology is making cash more efficient, not just replacing it.
Interesting. And then there's this really counterintuitive point you raised earlier, cash in a crisis. Tell me more about that.
Yeah, this is where it gets really fascinating. You'd think in our high-tech world, digital would be the answer in a crisis. But we consistently see the opposite during big economic shocks, political instability, natural disasters, even major cyber attacks that take down digital systems.
People turn back to cash.
They hoard it. Demand surges. Because when the power's out, or the internet's down, or people lose trust in banks or digital networks, cash is the ultimate fallback.
It just works, offline, no questions asked.
Exactly. It's reliable. It provides a sense of security that purely digital systems, which rely on a lot of infrastructure, just can't guarantee in those extreme situations.
Here's where it gets really interesting, showing just how resilient cash can be.
It really is. And this raises an important question about our reliance on digital systems and the inherent value of a physical backup. Having that tangible offline option seems almost fundamental.
Okay, so wrapping this up. It's clear cash isn't going away anytime soon, despite the digital wave. It's driven by real necessity for billions, by preferences for privacy and control, by its sheer universal acceptance. And even as digital payments rise and governments push back, cash is finding ways to coexist, become more efficient, and, crucially, it retains its unique role as a fail-safe in uncertain times. So, here's something to think about as we finish. Considering everything, the drivers keeping cash alive, the forces pushing against it, and this surprising resilience, how do you think the role of physical cash might shift over, say, the next decade as digital tech gets even more embedded in our lives, but at the same time, global instability seems, well, persistent? What unique value will cash hold on to? What can it offer that digital just can't replicate, ensuring it remains part of our financial toolkit?